Welcome to Chapter 7, Fund Performance and Benchmarking. In this chapter, we will understand how the performance of alternative investment funds is measured and evaluated. Investors need to assess whether a fund is generating adequate returns relative to the risks taken. To do this, they rely on performance metrics and benchmarking techniques that help compare funds and evaluate the effectiveness of investment strategies. The performance of an alternative investment fund is typically evaluated based on the returns generated from its investments. However, performance is not just about absolute returns. Investors also consider the risk taken to achieve those returns as well as the consistency of performance over time. For example, a fund that generates steady returns over multiple years may be considered more reliable than a fund that delivers high returns in one year but performs poorly in others. This is why performance evaluation involves both return and risk considerations. Several financial metrics are used to evaluate fund performance. One of the most important metrics is the internal rate of return, or IRR, which measures the annualized rate of return generated by the fund's investments over time. Another important measure is the net asset value, which represents the total value of the fund's assets after accounting for liabilities. Return on investment is also used to assess overall profitability. These metrics help investors understand how efficiently the fund is generating returns relative to the capital invested. Benchmarking is the process of comparing a fund's performance against a relevant market index or industry standard. This helps investors determine whether the fund is outperforming or underperforming relative to similar investment opportunities. For example, a private equity fund may be compared with other private equity funds, while a venture capital fund may be compared with venture capital benchmarks. Benchmarking is important because it provides context for performance and helps investors make informed decisions. To better understand benchmarking, consider a simple example. Suppose an alternative investment fund generates an annual return of 15%, while a relevant benchmark index generates 12%. In this case, the fund has outperformed the benchmark by 3%, indicating strong performance. However, if the fund generates 10% while the benchmark generates 12%, it would be considered underperformance. This comparison helps investors evaluate whether the fund manager is adding value. In the next chapter, we will explore legal documentation in AIFs and understand the key agreements that govern the relationship between investors and fund managers.